Okay, let's continue to get ready for earnings. Once a disruptive company in the entertainment space, Spotify has just been completely left for dead on the chart, making lows this week, trying to hold on to the 52-week lows barely. Let's bring in Paul McCarthy, joining us, president of Kisco Capital. Paul, good to have you here this morning. You've got your mind on Spotify ahead of the report. How come this stock has fallen so far out of favor? It feels like it was just yesterday. We were hearing about how they were going to dominate podcasts, change the world of entertainment, et cetera.
That's a good question. I heard your intro, and Spotify's got a great brand, and it's a worldwide brand. They got 180 million users and subscribers, and it's fun to use. But as an investor, it's difficult to know what to do with this stock. I mean, it seems when you look at the IPO in 2018. The chart has mostly been a sideways affair since then, aside from a pop last year when all the meme stocks really rallied pretty hard. And now we're at the bottom of that range, and the all-time low is 103. We have earnings come out tomorrow. They're projecting, I guess consensus is like a loss of 20 cents a share. The real risk here, it's trading at 108 right now. And the options markets are telling us that it's a $16 range around where it's trading. So it's possible that if we get bad news tomorrow or news that the market doesn't like, that it breaks that all-time low. And if you look at just some technicals and doing some Fibonacci extensions, that could put the price down near 75 if the market really decides to roast the company. And companies are getting roasted these days. If you look at Netflix with their earnings, it was about the subscribers. They actually had decent earnings, and the market didn't care. So Spotify is coming out with projected from their last quarter, going to add 3 million subscribers, so from 180 to 183. They did have to shut down their subscribers in Russia, so we know we lost some there. They've been heavily promoting their new premium subscription at $10 a month. Mm-hmm. And so we're going to find out tomorrow what's going to happen. But it really feels like there's a cliff risk with this stock right now. And so, it's not a stock that I've found very attractive just because there's no trend in it. I think the stock, the company either needs to show something fundamentally that they can really grow, continue to grow their top line among all the competition, because they compete against Apple, Amazon, Sirius XM. And, they're going to have to show something, I think, good tomorrow in order to keep the stock up. So it's been a very tough environment. So I really think that this is, if there's a valuation adjustment, maybe that's something that makes it more attractive to buy. But, I'm really on the sidelines on this name right now.
Cliff risk, I think I heard you say there. And right. I love that description, because we've been down here around $103, $105 many times in Spotify's history, and it has held up. So if it doesn't, then I don't even want to think about what that cliff might look like if it does break. It's one of the more interesting trades, because as a product, I feel like it is more essential than probably 99% of the stocks to my life that we talk about every day, but it's just right. Doing terrible. Is this a potential company that's small enough but interesting and disruptive enough for maybe an Elon-style Twitter takeout? Perhaps not him, but is there someone waiting in the wings to say, you know what, I could do better with Spotify?
Yeah, you kind of read my mind here. When I look at the Twitter, chart too, if you want to pull that up, it's been largely a sideways affair. And then at the end of it, they got acquired. And, so both great brand values. And, with their new podcasting, that's really competing with YouTube. Clearly they're competing with, Amazon and Apple. They're trading at something like less than 2 times revenues. So, I think it's actually something that's a good add-on for a deep pocket. The margins of the company are in the mid-20s. They get about 29, I think, on their premium, all in and blended, I think it's like 26.5, which is okay. It doesn't light the world on fire. And I think that, in a bigger platform, that's something that can be rolled out. And I think the next phase we're going to see, because there's a cord cutting, then you had all these apps that you pay $10 a month for. And now it seems as though we might be going back to rebundling. So, and you see with, so I think that's maybe the next trend. And I think that, you look at Activision was just acquired by Microsoft.
Yeah.
And so if they wanted to take a shot at Google and Apple, that would be a great avenue to do it. And it wouldn't break their bank. They could just write a check for the company. So, I think that's very much in play. And the real question is valuation. What price is that going to happen? And so maybe that curtails some of that cliff risk, but I wouldn't want to bet on it. But for sure, if you see the stock drop below that key support level, that's around that 103, 105 level, if you're one of these CEOs out there, you got to be thinking about it. I just think that it would be something that would be interesting to add to your, repertoire if you were, let's say, a latecomer competing with some of the big tech companies.
Love that point. Paul, we're going to trade it with that in mind. Appreciate the thoughts here. Nice setup for us to do some trading here in Spotify. Paul McCarthy.